Welcome to Protea Weekly. My name is Zane Stevens. I'm the founder of Protea Financial. Welcome to episode 11. I'm just back after a 4-day weekend away with the family, feeling re-energized. Headed up to the mountains, up to Lake Tahoe, um, way up there in the Sierras. Got into playing the snow. Kids had opportunity to ski and sled. It was just 4 really good days away to connect with my family, rest and relax, and just like find an opportunity to recharge. It was a 3-day weekend. We made it a 4-day one. And I'm back at the office today, ready to sort of share some advice with you guys. And you'll see that my question today, or maybe it is a statement, is what does it cost? And we are a company that focuses on the wine industry, which means specifically that our businesses sell inventory. And the number one question I always have for winery owners and business owners in general who sell products is, what does it cost? Do you understand what your product costs? Now, obviously, if you're buying a finished product and selling it, if you're a retailer, this is a fairly easy topic. You'll generally have an invoice that will have a price on it, and that is how much it costs. Now, it can be a little bit more complicated, assuming you imported that object. You might have some, exchange rate differences. The price changes because of that. You might have some shipping costs that should be allocated to the cost of goods. You might have some freights and taxes, as it comes in, those import taxes that you need to include in that cost. You might have some trucking costs to get it from, the harbor point to your business. And all of a sudden, even though you're selling a finished product, it becomes way more complicated on what does that product cost. And this is just in a simple scenario of where you are selling a finished product. Think about it where it gets even a little bit more complicated. Maybe you're taking 2 finished products, putting it into a box and selling it. Well, now you need to understand the price of each product, the price of the box, the labor involved to pack that box and seal it. Were there any import costs that you need to allocate it? Were there any shipping costs that you need to allocate? A little bit more complicated, right? What does it cost? Now we'll take it a step even further. We are a company that manufactures our products. We take a raw material, we go through a process of work in progress, and we get to a finished good. What does it cost? Do you know how much that product actually costs you? The general answer I'll get is, yes, we do. And I'll ask a few more questions. They'll go, well, we didn't think about that. Figuring out what the cost of your product is can be a little bit more complicated. And it becomes even more complicated for small businesses, specifically those in the United States of America, because for a lot of small businesses, the IRS will say, you can do your books on cash basis. Easy, great, simple, quicker, sure. But if you're dealing with inventory and you're not tracking the accrual cost, what is the true cost of that inventory, not what's the cash out the door, you'll find it very hard to understand what your costs really are. And when you sell that product, how do you know what the real cost is and what your gross margin is? Now, part of this obviously is because people understand from a tax perspective they can get cash basis. So if I'm paying things early, great. I'm going to take a lot of tax deductions early on, and I'll make it up in the future. The problem is obviously a lot of people are getting their books maintained once a year by their tax people. You're paying your tax person to maximize your tax savings. Your tax person is trying to allow you to pay the least amount of tax legally possible. When you're a business owner, your goal should be to maximize profits. those two don't always align with each other because lots of profits could equal lots of taxes. If you're running a business that sells products that you manufacture, or any products to tell the truth, you should at least be keeping a set of an accrual books so that you can make better decisions because you know the true cost of your inventory. Understanding the cost of your inventory will not be possible on cash basis books. If you're selling products, you need an accrual set of books, or how I like to call it, accrual-ish. You're a small business, you're under the IRS tax threshold, you know you're going to do cash basis books, fine. Do everything cash basis except for the cost of that inventory that you need to sell. Your revenue and your cost of goods sold should be accrual basis. If you're using cash basis, you will get confused. Now, this might just sound like an accountant selling you information to make more money. Possibly. But I like to see accounting as a service to provide you the information and the roadmap to make better decisions. And the only way to make better decisions around what inventory you're going to manufacture and what inventory you're going to sell and where is to be able to understand what the cost of that good is. And when you get into a complicated scenario like manufactured goods, you need to understand what goes into that cost of the product. Generally speaking, we all understand that the raw materials and the packaging material, or the hard costs of what that goods actually goes into, is important. So if you have a product that is going into a bottle, hey, you need to include that cost of the bottle as well as the product going in the bottle. You probably need to include the cost of the closure on that bottle, because you're not selling it with it just leaking all over the place. Additionally, if you're putting a label on it, that's going to be included as well. If you have a special box that has to be there every time you sell it, think about your beauty products that has a pretty box with a bunch of instructions and warnings and all of that goes with it. Well, that's part of the cost of your goods as well. But here comes the kicker. Here comes everybody forgets about. It's easy to remember the raw materials. It's easy to remember the packaging costs. Both of those you can see. But the costs that we all forget about, the people and the overheads. We need to include the costs of the people manufacturing that process or bottling that process, or both. You need to include a labor allocation. Generally speaking, it'll be the total cost of the labor that does the work divided by the units produced to give you a cost to allocate per unit. The sum comes with overheads. If you have a facility where you're either bottling, packing, or manufacturing the product, you have to include the cost of that facility in the cost of the product you're producing. So if you are renting a space to be able to do your production, the percentage of that rent related to the space where you are doing production needs to be allocated to the cost of goods sold. So let's think about, you take your rent, I use 80% of the space for my manufacturing process, 20% for administration. Well, we'll take that 80% of that rent divided by the number of units per manufactured or bottled, and we'll allocate those costs. You cannot forget about labor and overheads. In many cases, it could be a fairly material number and would significantly affect the cost of your product and thus significantly affect how much you should be selling it for. And I say should because the way you should be calculating your price is one of two ways. Either the market will pay this much for my products, I'll figure out the cost later, or this is how much it cost me to manufacture. In my space, the general markup is X. This is how much I'm going to sell the goods for. Now, this is generally the preferred method because it will protect your gross margin. But how can you set the correct price if you don't know how much it costs? Think about a bottle of wine, and I'm just going to use a generic low number just to make it easy. But it cost you $8 for the juice, the bottle, the label, and the closure. You didn't think about labor, you didn't think about overheads, you didn't think about that bottling line that you had to rent to be able to put the juice into the bottle. And you say, my wine cost me $8. Well, I'm going to set the price because I want a 50% margin. So I'm going to double up on my price. I'm going to sell this wine for $16 a bottle. Fantastic. 16 minus 8, 8 over 16, 50%. We're in a good shape. Wonderful. Oh, then somebody reminds you that you should have included labor and overheads in there as well. The labor was another $2 and your overhead was another $2. Oh no, that $8 bottle of wine now costs $12 to manufacture. All of a sudden now I've got $4 of gross margin. 16 minus 12, 4. 4 over 16, 25%. Ugh, not good. Not good at all. That wine should have been at 12 times by 2, $24 a bottle. Significantly different price point. Generally a different consumer, and potentially even a very different strategy on where and how to sell that product. You didn't know the cost of your product that manufactured, so you could not set the price correctly. No good. Additional benefits of knowing what it costs will allow you to make better purchasing decisions because you can understand what the price differential will be if I buy more or buy less of a certain product and the price breaks that come along with it. Also, if you understand the true price of your product, you can make better decisions when your vendors, the people that you're buying some of these products for, come to you with price increases. It'll give you a better understanding of, can I absorb it? If I can't, can I push prices onto my customers? Or do I need to find an alternative? Or do I need to try offset that cost somewhere else? It is critically important that you understand what it costs because it won't just affect the decision making around revenue, it can affect the decision making around price adjustments. Also, understanding the true costs so you understand your true margins will allow you to make better decisions around sales and marketing costs. Because if you decide to move that wine from a direct to consumer product to a wholesale product, you got to understand that you will have to take a price cut because other people need to make money as well. If all of a sudden they tell you, hey, we can only give you, we want to pay 75% of the direct consumer price on a $24 bottle that cost you $12 doesn't sound so bad. But you've said that it's $16, they take the $4 themselves, all of a sudden you're break even per bottle. That's before any allowances for sampling, tasting, testing, all of that comes with it. What does it cost? If you are a business that is selling products, these are critical questions that you should be asking yourself. Inventory costing can be complicated. Get good professional help from people that understand your industry and the nuances that go into the cost of your product, especially when it comes to manufacturing. Inventory costing is tough. But what is more difficult than that is not knowing your cost and making bad decisions. Bad decisions on a good product will most likely leave you in a cash flow negative situation. Cash flow negative situations generally means you're going out of business. So if you want to be more successful, understand the cost of your product. Good information, good product, good decisions equals a successful business. I hope this has been helpful. I hope it made sense. I look forward to expanding on inventory costing and the importance of it in the next few weeks. Until next time, be kind. Goodbye.